today is, thank you, Manish. Right, today is the last of the series of the webinar, and I hope that everyone has had a good had some good insights on what AML or anti-money laundering, counter-terrorist financing, and financial crime looks like or fighting financial crime looks like. So to begin, we have the usual administration. Please mute your microphones and then also keep your mobile phone handy and use the group chat if you wish to comment or ask questions. Raise hands if you have any questions and unmute yourself. Parking lot will still be there for today. And then what I hope that we would do is that if anyone still continues, if anyone has questions in the next few days, what I would hope to do is that because we are going to have the learning hub up, any of the other additional questions that come in, I would also park them into the I will any of the answers I would park them into the learning hub as well. So this is the link. Right. Okay. So since we started from module one, we had an introduction about correspondent banking and why it is important for us to uh, improve on our anti-money laundering and counter-terrorist financing regime. And then we talked about the fundamentals of customer due diligence. And then after that, with sanction terrorist financing, we have looked into the client life cycle. And then also discussed the how we can do a risk assessment on our customers, on our products, as well as now on our vendors as well. So now we wrap it up in totality into the last session, which is on suspicious transaction investigation and reporting. So I'm not going to touch too much today about the legalities or the legal parts of suspicious transaction reporting, but more on the practical aspects of it. So a recap of module 6 last week was important to note this from Transparency International about the importance of exposing corruption and to hold the corrupt account on if we can understand the way corruption works and the systems that enable it. So this is why we are doing this session, is so that we can understand how corruption can happen and also the systems. Otherwise, we won't be able to detect that. So some of the global references, and I particularly wanted to call out on FATF. On FATF is actually during the second module on customer due diligence, we talked about the transparency and ownership of legal persons and also the legal arrangements. And then in the last session, we talked about the misuse of citizenship. And misuse of citizenship and residency guidelines was actually issued by FATF and OECD in November 2023. And this also is in line with what has happened or what was discovered during the August 2023 money laundering case in Singapore, where we identified that quite all 10 of those arrested actually held many passports, not just one. And of course, Joe Lau, who was very famous for the 1MDB case, was one of them. And this month also we had this tycoon's death penalty. There has been a few questions in the last 2 weeks that came since this news came, and I thought that it'd be good to also highlight why this tycoon corruption case actually attracted a death penalty versus the 30 months jail and the 40-month jails of the so far it has been 3 individuals that have been sentenced. Now the difference is that the tycoon was actually charged for corruption, and this is the predicate crime. she would have done her money laundering, but she was charged for predicate crime onshore in Vietnam versus these individuals who were arrested in Singapore. They were charged for money laundering. The crime did not happen on Singapore soil. So, but what happens after the 13 months or 14 months jail, it would not be for me to speculate anyway. It's just to highlight and to differentiate one being charged for a predicate crime, which carries a heavier sentence, versus those that were charged for money laundering. And this was a definition of bribery, and we had a definition of corruption. And also, we discussed in the last module about the conflict of interest and how we can discharge our professional duties versus some of our own personal interests or businesses outside businesses. And I also wanted to re-emphasize on this point the importance of training all our staff and making them aware of all this potential crime that could be happening in our own backyard. And also basically how a teller in a HSBC branch was able to stop a $500 million heist of a country. So this particular case has been reported, and if not because of an alert branch staff at the which is actually at the teller, we would not have been able to stop it, and a country would have actually suffered because of the loss of the 500 million. This is quite serious, and also this had also brought to light the misuse of swift signals and not really looking into the detail, because whether or not it's an MT103 or it's an MT202, if we just look at it and say it's an MT202, it's sent to a bank without recognizing that there are the underlying beneficiaries to this MT202, which shouldn't be the case, because message type 202 is only meant for bank-to-bank transactions. And if there is an end beneficiary to an MT202, this should be alerted. So a lot of training opportunities there in terms of learning how to identify all these red flags or anomalies, which is actually part of transaction monitoring as well in the correspondent banking space. And we touch also on third party due diligence. Third party due diligence, a lot of times is actually way more extensive as compared to the a customer due diligence, because a customer due diligence doesn't look into the services that is being provided by the vendor. Third party covers the vendor part, where we also need to look at the capability and the reliability of the vendors that we are choosing or hiring. And also on that part is also for us to assess and prevent internal corruption. And so with that, the controls that we typically put in place is having all these gifts and hospitality policy, conflict of interest, declaration of outside business interests, and also looking at the hiring decisions in our company. And on top of that is also to when we do any contributions or donations, is to look at has to be an appropriate level of due diligence to be conducted on organizations and individuals. So with that, I thought that I would like to invite our guest speaker today, to Adam, to also say a few words about Adam is actually an ex-regulator, and I thought that it'd be appropriate for us to invite a speaker today to share some of his insights as a regulator and what he would look out for. Over to you, Adam.
Thanks, Julia. I put my special shirt on for this. It's very hot here at the moment. Hi, everyone. I've been watching these presentations, catching up on them, and I've been really enjoying them. Julia does a great job, and I think we have a lot in common about our view of how AML and all the other compliance mechanisms we have now can actually make the world a better place. I've particularly liked the fact that you make sure it's clear that these aren't victimless crimes that we're talking about here. I'll just mention I'm on the board of Transparency International in New Zealand, so I also particularly liked seeing all the references to DI's work. It's obviously a pet area of mine. I thought I would focus on the on the transaction monitoring and the suspicious activity reporting mechanisms, as that's the topic of today's conversation. Julia's covered. It's almost like listening to myself, so I'm not going to go into the previous things. But there's a really important aspect to SARS that it took me a while to realize when I was a regulator. So I was part of the team in New Zealand in government, who helped introduce the anti-money laundering, the new anti-money laundering laws from about 2013 onwards. Prior to that, I'd been head of intelligence for our tax department, so I knew quite a lot about transaction monitoring. It was the CDD stuff that was new for me. I've only got 4 things that I thought I might highlight before handing back to Julia, because these are the things that I think, and I suspect they'll get covered, but these are the things I think are a little bit hard for regulators and the people in the private sector to kind of understand. It's a little bit nuanced. The key starting point is that suspicious activity or transaction reporting, and I'm going to include prescribed transaction reporting in this mix, any of that kind of statutory reporting that is required. It's predominantly a source of intelligence. And I know that's obvious when you say it out loud, but I have noticed over the years that we can get a little bit lost in the detail of it. And when I say it's a source of intelligence, what I mean is, as a regulator, what you're doing as a financial intelligence unit, you're getting these pieces of intelligence from across the transaction realm. And that includes non-financial organisations as well. Real estate agents are particularly important for these things. Lawyers should be, but their legal professional privilege tends to mask things they don't want seen. And so I'm just going to highlight that real estate agents, money laundering employs real estate depending on what survey you look at, 30–40% of the time. So always keep a lookout for real estate in transaction monitoring. So you've got these SARS and you've got all the other transaction reporting. And as a regulator, you're trying to aggregate that to give you a whole of customer view. And that is more than any individual financial or other organisation can get. So one of the key things in there is you're looking for a way to connect them together. And again, that's very obvious when you say it out loud. But imagine the millions and millions of transactions you're getting from different organisations. You're trying to standardise how you receive them. And my key message there is, please, I know it's a chore sometimes, but please make sure the names are spelt correctly. Please make sure phone numbers are in there if possible, because phone numbers are a fantastic indexing resource. Think about how all this intelligence is going to be digested when you're thinking about suspicious activity and other prescribed transaction material. Then I'd like to just think about, I've also been the CEO or director of 3 or 4 financial service providers, and including a derivatives issuer, which is probably the highest risk. I actually say as a joke, we should stop issuing financial licenses to derivatives providers. We should just give them a gambling license and be honest about it. But the hard thing there is, and this is something to think about with regard to, firstly, internal reporting processes, and secondly, the way that those reporting processes are handled internally and by the regulator. So think about how this is going to be digested again, because what it comes down to is, as a regulator, understanding the risk appetite of the reporting entity. We have to look at it and think, why did they report that? How did that fit in with their own? You're almost trying to second guess what they're thinking as well. It's not just a vanilla, I'm digesting a machine digesting a transaction. I wanted the reporting entities who are here to just think about how that can be a very useful part of the communication that they establish with whoever they're reporting to, usually the FIU. The second aspect of that is you may have things that you don't want from a reporting, you don't want as an organization, but that are actually acceptable to the regulator. So you need to be very clear about what your rules are for internal reporting and external reporting, in the sense of reporting to a financial intelligence unit. And I know Julia is going to talk about whether things get reported to the board of directors and those sorts of things. And that's what that comes down to. I would argue that you need mechanisms where things don't get reported to the board of directors in certain circumstances. And a lot of the law in New Zealand actually gives a very strong mechanism for that. It depends on the jurisdiction you're in, obviously. Kind of on that theme, watch out for rules within your legislative mechanisms that actually discourage reporting. We learned early on that having a 72-hour deadline to complete enhanced due diligence once an organisation had decided something should be a suspicious activity report was ridiculous. All it did was it pushed the internal processes to say, well, we won't even use the term suspicious activity until we've actually completed the EDD, which defeats the whole object of it. This is a classic example of lawyers writing laws without actually understanding what they're going to mean on the front line. So that's just something for if you're part of a lobby group, a banking association or something like that. Happy to give some case studies about when that goes horribly wrong. But the flip side of that is, and this worked very well in New Zealand, one of my businesses, we carried out hundreds of thousands of CDD activities for real estate agents each year, millions actually. And one of the things that happened early on was we developed a very good relationship with the financial intelligence unit here, which allowed us to, and they'll probably won't like me saying this out loud, but we used to just phone them up and say, we've seen this thing. Do you want us to complete EDD on it? We think we should. What would you be interested? And they'd say, oh, yes, please. That one's, and it was as simple as they'd recognize a couple of names. You could hear the keyboard going. They were looking people up. What I'm getting at there is, remember, this is a risk-based regime, and this is an intelligence operation. It's not a prosecution operation. This is how you decide who you're going to investigate. It's not meant to be the thing that actually decides whether the investigation will proceed. It's just part of the mix. And I'm saying that because I love the enthusiasm amongst the analysts on the front line, but some people can get a little bit carried away and go down a rabbit hole. So it's a very, very fine balance that needs some very good leadership. I think I'll stop there because I've been rambling on for about 10 minutes, and there is much more interesting stuff to come up in the presentation. Thanks, Julia.
Thanks, Adam. There's a question from Chin Yup. What's the difference between information and intelligence? When does information become an intelligence? That came from me.
Now I know, Chen, I've seen your name before, and I'm sure you know the answer to this. It's a really good question. There's a technical definition: intelligence equals information plus action, and that sounds a little bit odd, but what it fundamentally means is that it's information that means you're going to do something. So information, and that's why we call them intelligence products, because the product is actually something to cause or facilitate an action.
Yeah, that makes a lot of sense to me now.
Yeah. Thanks, Adam. I'd like to take this opportunity to thank you for responding to our SOS signal and being available at very short notice.
And you know I can talk about this stuff for hours, so I hope you respect the fact I kept it to about 10 minutes.
It's great to have you on this call too. And Chinya, good to have you here again. If you have any additional thoughts to share, that would be most welcome as well.
Okay, let's continue with our presentation. Okay, so today's module, I'd like to do a bit of reflection on the past 6 modules that we've gone through, looking into our environment and bringing CDD to life, really. And then the process of handling and reporting suspicious transactions. And most important is also the part about some key considerations in post-reporting, as well as the process of customer selection and exit. Okay, so I thought that it will be interesting for me to also look at this. This uh was this is Indonesia, and I remember when I used to work in an offshore island off Sabah called Kota Kinabalu, Sabah in the Borneo, Labuan. There was actually one night a few of us were having a campfire by the beach. This is real. and and what happened was we saw a boat coming to shore. And what my staff then told me, who are locals, they told me, okay, look away and do not say anything, because and pretend that you don't see anything, because these are a bunch of smugglers coming on shore with their cigarettes. So Indonesia is famous for producing kretek, which is a kind of a cigarette or cigar. Um, and so, yeah, that's what we did. And that was in the mid 90s, so it's close to 30 years ago. And so you can see that, where especially when it comes to island nations, there tends to be a bit more risk from that perspective, because you can't expect the coast guards to be able to survey everyone off the islands 24/7. There's a lot of resources. And so this happened in the first in actually in July last year, was reported about the armed robbery incidents in the Straits of Malacca in Singapore. And also this is across all the islands, and which this was actually the first time that it occurred to me, or I did a reflection on my life living on the island last time, and I thought that this is an area which is would be very pertinent to the Pacific Islands because of the geography. And yep, this is where we are, the Pacific Island countries. I got this from I I took this map out from the Google, and I believe this is pretty recent. So we see the number of islands. In Indonesia, there are about 16,000 islands, or okay, 18,000 islands sometimes reported, and with about 6 inhabited. So I'm not sure how many islands there are in the Pacific Ocean. Shiu, would you know? Maybe about.
No, I don't have the exact numbers, but there are 14 island countries that are members of the ADB, and within those island countries, each one of them have several islands. So in fact, I have not kept track of what's the total number we are working across.
Okay, yeah. So just assume that because there are 14 countries in total and the Pacific Ocean is so huge, I believe that the number of islands would definitely be more than one Indonesia, which is about 18,000. I'm just imagining what it would be, how difficult it would be to survey. So so on that point, right. So on reflection, looking at from our past modules on customer due diligence, on risk assessment, perhaps I can invite everyone to consider the geographical and economic characteristics of the 14 countries and the Pacific Island countries. What are the financial crime and money laundering risks that you think your region is inherently exposed to, which would be more than a country, say for example, like China or Middle East, to that aspect, from that aspect. What are the consideration? What are the geographical and because of the geographical and economical characteristics, what are the financial crime and money laundering risks do you think that your region is inherently exposed to? Anyone with any how about you, Adam? Are you there still? Fishing.
But seriously, the fisheries sector is a significant issue, and it sounds almost flippant, doesn't it? Because we like to go down to the beach and do some fishing, but it's big money. It is really big money.
Yeah, actually, when you talk about fishing, that's what I thought as well when I was in Labuan. I thought that those were midnight fishing, but my staff just told me, look, you just pretend you didn't see them. So that was kind of scary for me. I think it's probably more rampant now that as compared to 30 years ago. Um, you, you mentioned about fishing, and Chin Yap coincidentally talked about human trafficking. They are kind of like related, which is especially in the more in the fishing industry, there's modern slavery, and I am quite aware of that, where especially in the less developed country or the poorer countries where a lot of the people were recruited to become to work in the fishing boats, and there have been a lot of reports of modern slavery in their mistreatment. So that's an area, especially this year, has been a lot of focus on is on modern slavery in the fishing industry. Yes, Shiu, logging. I think the environmental crime is something that is quite common in among the um among the islands as well. Like again, it's very difficult to monitor because there are so many islands. Yeah, bribery and corruption. Um, and typically, a lot of the island countries are not rich, possibly except for Japan. Most of the island countries are relatively poor countries, and so bribery and corruption does happen quite rampantly, and it's also hard to detect. Yep. So moving along as yeah, so these are some of the areas that I see to be risk inherent to island nations. I think this is non-exhaustive, and because of, again, we talked about the extensive coastline and the numerous remote islands. Some like using again Indonesia as an example. 18,000 islands with only 6,000 inhabited. And Philippines has about 7,000 islands with 2,000 inhabited. So it's really, really difficult for authorities to monitor and to control the movements. And islands being used as transit points for smuggling drugs and weapons and other illicit goods. So the one that I saw, it was even a known fact that they were smuggling cigarettes. So what about the other goods, right, that is being smuggled? And there is usually limited access to banking practices as well. And I got this when I was conducting a training in Philippines where the the bank said that there is more reliance on money service bureaus, and some of them even have the money service bureaus actually, the agents being the mom and pop shops in the island, and some of them are sitting with the village heads and all that. So these are some of the concerns that we have on the villages being used as money mules as well. And then also, because of the less developed infrastructure, the telecom lines may not reach there. I mean, it could actually be a blessing that the telecom lines are not so advanced. But having said that, there, because of the less developed infrastructure, is also more vulnerable to cybercrime, identity theft, and financial fraud. And this is also typically because, or again, of the lack of infrastructure. There may be less people who are literate or are financially literate, I'll say, and they are more susceptible to all this fraud and scam as well. Yes, Chinya, as you mentioned earlier about using the islands as transit point for human trafficking. Um, and then having the smaller population, it's also the tendency to have regulatory bodies that have limited capacity. And then many island nations rely heavily on tourism and offshore banking. So this is also where exploitation happens as well, especially on the tourism side. And we know about the sex trafficking and about online sexual exploitation of children, and all this can happen as well. And also illegal immigration. And this is also because um, I have seen a lot of all this in the in the northern, or the east in the Borneo Islands as well, where there are undocumented migrants and the funds moving across borders. So I wanted to do a little bit of refresh about the brief history of the cross-border payment, how the first cross-border payment was recorded, and then all the way um, how it has evolved until now. We have all these systems. So it gets faster and faster. And I think in the mid 90s and 2000 is probably when the banks, since Swift actually launched a network, we had we started to have more capability in terms of doing cross-border payments. And usually it will take weeks before our transfers are completed. Now with fintech and with blockchain and all that, instant payments is almost instant. In the case of doing a cryptocurrency transfer, it's just a mere maybe 15 seconds at max to for a um transaction to happen. And maybe with, say, for example, TransferWise or a fintech that is a fiat currency, um I think it would only take a matter of 5 minutes or so for a transfer to be completed. And so you can see that while the typologies, or I would say the crime, may not necessarily be any different, money laundering may, the types, you will still have your placement, layering, and integration is not very different, but the speed of it happening has changed. And interestingly, I am not sure if everyone has read this in the papers recently, where uh the money cash was being transported to Dubai in luggages. So cash smuggling. Someone threw this question to me: is cash smuggling considered as money laundering because it doesn't have layering, it doesn't have integration, it doesn't have uh placement into the system, into the banking system. And I think this transporting of cash is just the beginning of it. Over time, there is still money. There's still going to be. It still has to be integrated into the financial system. So money laundering is still happening. So another refresh is on the common correspondent banking structure, and to also think about direct how a respondent has a direct relationship with the correspondent. I think what we are more concerned about is that the payable through, let's just touch that first, or the pass through is where in the Wolfsburg questionnaire, there is a question, and very common correspondent banks would the correspondents would have in the questionnaire asking this question: do you offer payable through or pass through accounts or facility for the customers? And the answer is usually no. But what we are now also looking into, this is where this is also part of the transaction monitoring in a correspondent, is to identify nested activities. Nested is where these banks are using the respondent to have access to the correspondent for and they do not have a direct relationship with the ultimate correspondent bank. While we are looking at banks and the terminology of correspondent banking, now we are seeing more and more of these other non-bank financial institutions, like your crypto exchanges, like your fintechs and your money service bureau, making use of respondents to gain access to the international financial system. So something that uh and now, because of the fintechs, it is also not just more risk, but also because it's faster. um Having worked in a fintech before, I have seen a lot of instances of reporting for SaaS, reporting for money mule accounts, and it is getting so easy to be onboarded to any of the fintechs, and then after that, from the fintech, uh, it is you gain access to the correspondent banking system, and all this is where, when it is so easy to be onboarded and open account, is where you have a lot more risk in terms of money muling activities as well. So again, a refresh on what cross-border correspondent banking looks like is where payer in country A pays to the financial institution, typically the bank, and then it goes through the payment network into the correspondent bank, and then that's how. And then after that, the two correspondent banks will be talking to each other and then making the payment in the recipient country. So broadly, cross-border correspondent bank works this way, as a refresh, so that when we are looking into when we are putting into consideration or having a discussion, we will remember that this is how the structure looks like. And again, bringing customer due diligence to life is, first we talked about the onboarding, customer due diligence, and then we had this risk assessment, risk-based approach. Uh, we have the ongoing monitoring, the periodic review, where we have the transaction monitoring and the transaction screening that happens. So transaction screening is typically for pre-payment or pre-transaction, to stop a transaction from going through the system. It is typically for the screening for sanctions. But now we are more and more seeing the pre-transaction screening to also include screening for potential fraud, and then putting a bit of friction into the entire process to with the hope of preventing fraud. So the pre-screening now, the pre-transaction screening has now included fraud screening for a lot of the financial institutions, and then transaction monitoring to we have all the scenarios in there that we hope to be able to um, detect any of the red flags and identify if there are any money laundering risks in there, and even terrorist financing. And then now to today is actually the last leg of it, which is on reporting the outcome and the regulatory reporting system. So there are this is in the FATF about the requirement to report suspicious transactions if a financial institution suspects or has reasonable ground to suspect that funds are the proceeds of a criminal activity. So this is on the requirement that a financial institution must report to the country's financial intelligence unit, which Adam mentioned as well earlier. And oh, okay. So, I have actually also questioned whether the efforts that I did was worth it, because I would I think typically weekly be filing suspicious transactions, and usually, I mean, I've not had any of the officers contact me uh specifically on my suspicious transaction reports. They were silent. What do I do about that, right? And it was actually quite heartening when we know and we learn that in the case of the Singapore money laundering raid, the first case emerged in 2021, and it did take them this long, uh, almost 3 years, to be able to get all the information together and the intelligence together before the authorities or the law enforcement or agencies struck and arrested the people. So it's actually taking from the beginning all these reports, um, and then Adam, please feel free to correct me if I'm wrong, is that when these were first reported, they collected all the information from all the agencies or all the financial institutions or non-bank financial institutions, or even uh, uh, those designated non-financial institutions, non-bank and businesses and professions, DNFBPs, and then collate them, and then after that form a picture, and then and form a case so that they can make the arrest. So it is not so easy to just say, file the transaction and you see action coming from it immediately. In fact, for me, it is very difficult. I know that from a banking perspective, it's also very challenging when it comes to how to manage this process. I will talk a bit about the practical considerations later. So some of the suspicious activity is that inconsistent business, unusual instructions, unusual customer behavior. The unusual customer behavior has become a very difficult thing to do to identify. It's also because in the past we would be relying on the bank tellers, like in the case of the Central Bank of Angola, where you will have the bank teller looking at it and say, oh, is there something suspicious happening? Or lately we have seen a lot of news reports saying that the bank branch, the staff, the relationship manager has been able to stop a customer from falling victim to fraud, because they had been able to identify that this old lady walks into the branch wanting to withdraw a substantial amount of money. And when the bank teller asked the question to the old lady, oh, why do you want to withdraw so much money? And And then she say, oh, I'm giving it to my nephew who needs to start a business. And then they start digging a bit further, and then, lodging police report to look into it. And this is happening when you have a face to face and you're able to have those conversations. And especially with the fintech, it is getting more difficult. It's why I'm not saying that I'm still a very huge supporter of the crypto industry or the virtual asset industry. It's just that we would need to be more careful, because the transfer happens too fast. It's split second, and the money or the crypto currencies are already with the perpetrator. And so it's very difficult for us to be able to identify that. And most of the time, when all this happens, the authorities are only able to trace back, and it will take a long time to do the tracing as well. And if they have gone through peer-to-peer transfers with wallet to wallet, we will not be able to identify the people behind it. Um, One of the other thing is that when we do the customer due diligence, customer may refuse to disclose information. I think maybe in the earlier days of customer due diligence, you will have a lot of customers refusing because they did not see why they had got to go through the hassle. But in recent times, the customers are becoming more cooperative. And so refusing to disclose information becomes a red flag. It is not just about complaining that it is poor customer experience anymore. Customers are and more aware that the reason that this is the why they have been asked those information. Um, we have also the unusual approach, the transaction structure, especially in trade-based money laundering. Trade-based money laundering, you might see some of this in a weird way that the transactions have been structured. Yep. Yep. So Chin Yap says that, yep, it does take a long time to conclude a case because the STR submitted not only for financial regulatory authority but also other regulatory bodies to look at. Yeah, in the case of the in the money laundering case in Singapore, Interpol and is also involved, and it was across a few countries: Australia, Hong Kong, London. These were the off the top of my head have been involved in those investigations as well. And so I think the last one was on results from the investigation of alerts from name screening, and transaction monitoring, which we discussed. The alerts were discussed, or the red flags were discussed in our last module on transaction monitoring, module 5 on transaction monitoring. So these are some of the cases. Thanks, Adam. There is a document on the red flags that can be used for tax fraud. Yes. Tax evasion in the past had not been considered as a predicate crime, but I think as of last year, tax evasion has been included as one of the predicate crime, listed as one of the predicate crimes. So it's still, I think it is still evolving and differs from one country to another, whether tax evasion is included as one of the predicate crime in the jurisdiction. And yeah, on that, we had this is where I think offshore banking or offshore financial centers are the ones that would also have to be on alert, especially on tax evasion. So these again were the examples from the scenarios to monitor transactions. This is from module 5 actually. And okay, so looking at large here, we talk about the large and complex transactions. Typically, a lot of the detection scenario evolves around having a transaction monitoring or based on magnitude of the amount. Usually they are looking at large and complex transactions. But of recent years, actually in the last 2 years, we have started to look at other kinds of scenarios as well. This is especially the case to identify potential risks on online sexual exploitation of children. So, and also where you probably have got to monitor those small transactions that go through frequently, and in particular with e-commerce. This was a conversation that I had with someone who is a merchant acquirer in e-commerce. Is where what they do is they monitor the transactions of the merchants, and say for example they see that their customer, who is a merchant selling stationery, receiving a lot of small transactions every day from the same say for example Shopee, right? They It's Shopee or Amazon, for example, where they also have it's B2B to C, it's a business to business to customer. And so the customer would also be making use of the Amazon Pay in to buy products from the merchants that are in Amazon. And so when you are looking at a ver a customer actually making a lot of purchases of stationery over one day, he he or she is making 5 purchases of stationery of small amounts. And then these are some of the things that they are also looking out for, to and because you need to be curious and say, why would a customer want to buy so much of stationery frequently during the day? Is there something different? So it's about looking out for transaction monitoring, is about looking out for anomalies like this. Does it make sense for a customer to be buying stationery 5 times a day? And then in the last module, actually it was module 5 on transactions, is transaction monitoring. Is does it make sense for for a merchant selling flowers to be selling flowers at night every day? I mean, occasionally, if I think that I may be very busy and I only have time during the evening to order flowers for my mom. If at all, it only happens 3 times a year, during Mother's Day, during her birthday, and during Christmas. So, and Christmas normally we'll be home, right? So let me just to give some example of would would a flower shop really, or even if it's online business, would they be doing more business during the night and during the day? So these are some of the anomalies that we should be looking out for. And a typical investigation process is where yes, so I did mention about the internal investigation because of the I this is how I did it as well, because when we had such a short timeline for us to be able to do the reporting, I my interpretation is that the deadline to do the reporting is when I have determined that the activity is suspicious. So I have, from the day that I determined that the activity is suspicious, a specific number of days to lodge the suspicious transaction. So when a transaction alert is sent to us, is that we look at it, and there are some institutions that have named it differently. They call it questionable activities rather than suspicious activities, so that they are able to differentiate the internal reporting versus the external reporting. So when a questionable activity is alerted, there will be the process of handling the alerts internally. Then the escalation, once they have done the first round of review, then you have the escalation and further investigation. Then on the request for information is where I constantly find very, very challenging. How do we request for further information from the customer to determine whether they are suspicious or not? And then of course the documentation. So the request for information, I have had some instances where We send the email out, and normally when we send an email to the customer, we'll ask them, we'll say that this is a routine check. We notice that you have this kind of transaction. We know what they are relating to. And most of the time, the customers would not respond. And there have been some a very, very brilliant way that bank staff, and this is also a why we need to train our staff to be able to handle this properly without, having to worry about tipping off. Um, of course, the bank staff would also need to have a good understanding, look through the due diligence documents before they ask they call up the customer to ask for information. And could it be that they will ask something along the line that, okay, so hi Miss So and so, and we noticed that you are new customer to us, and we noticed that this is the kind of transactions that you have been putting through. Mm, is there any way that we can enhance your service? Is there anything that we can do better, because we noticed this, and then we will just ask, and you just wait and see what the customer replies is. And the thing is that even from that is how a staff or a bank staff would be able to just at that point in time discern whatever that the customer is telling that would warrant further uh, inquiry into, or getting more, asking more questions. It is a very, very challenging situation. And I think I wasn't in those situations because I was in the second line of defense, being in compliance. And uh and I think that my heart goes out to the frontline staff who have got to manage the customers in this way, where they would have got to ask questions to the customer, to learn to see, to look out for red flags, and to see whether there's a need to ask further questions, and then to document that. So it is definitely something that is that needs to be considered, how we train our staff to be able to look out for red flags and to ask the questions the right way, so as to not to avoid tipping off. And then after that, we talk about the suspicious transaction reporting, filing the to the authorities, and then to on the post STR practices. And then we need to also do quality assurance and refinement. So quality assurance is where we need to see whether the process has been working well, and then we need to do refinement, whether or not we need to increase or improve the our internal control. So then the next one, FATF recommendation 21, is on tipping off and confidentiality. So of course, FATF has highlighted that the financial institutions and the directors are protected for any breach or disclosure of information imposed by the contract or legislative. This includes the GDPR, PDPA, whichever country we come from. In particular, where they do not, where they are worried about disclosure of personal data. Now, this is only when the transaction has been suspicious transaction report has been filed. Uh, so the challenge that I feel is uh, is most concerning is that while we are in the process of doing the investigation, a lot of countries do not have safe harbor as far as the data protection is concerned. How do I go about doing this investigation if I have insufficient information? Say, for example, very typical is in the fintech space, where I've actually seen some of these suspicious from our perspective, is we wanted to get more information on it, so that we can do a suspicious transaction filing with more information. But it was quite difficult. Say, for example, I'm in the fintech, and I see my customer making a transfer to another fintech. And but then again, while I see certain patterns that may be suspicious, I can't reach out to, say, for example, Revolut or to TransferWise to say, um, I would like to get more information from there, because from you because of this, because that's actually prohibited by the data protection laws in those countries, because well, it is not a SAR yet, and I can't really disclose. And especially if it's a SAR, I can't disclose to the third party. I can only disclose it to the regulators. So there are a lot of challenges here, the practical challenges on how we can actually do the filing and also the investigation. And then, of course, the tipping off is a concern that we have got to constantly train our staff that they have got to avoid tipping off on the transaction, so the suspicious transaction. So suspicion, reasonable grounds to believe, and knowledge. So so we can broadly describe or break them down into 4 categories. One is a speculation. It could be nothing more than assumption. So it could be suspicion, and it is more of being aware, because there is suspicion, but there was no documentation or evidence um, to say that this is really the case. Um, on this point, suspicion can be very subjective. I recall that I had 2 team members who were reviewing this, and they had very different the challenge with this is that they came from very different background, and one person may see it as very suspicious and another person may not. Adam, you would you like to speak? You
Actually, it was a little something about the previous slide, but perhaps I can chip in on the suspicion thing as well, because
yes,
it's such a difficult area.
it is.
I will say in my jurisdiction, I've never seen an example of a regulator arguing about suspicion, about what the threshold is, because it's so subjective. The way it works here is we expect people to be reasonable. What would a reasonable person think about that? But I know that in a lot of jurisdictions it's quite black letter, and there's quite a lot of case law around what suspicious means, particularly around, because this is a similar standard to that used for whether you should grant a search warrant. And so it's actually been debated in courts many, many times over the years. Sorry, it was a bit of a digression. Just on the previous slide about the tipping off, there's an aspect to this, and it just rang a bell for me because you've mentioned staff training. One of the things, I used to have a team of about 150 analysts, and one of the things I used to do with them when they joined the unit was impress upon them. We all get told that you need to keep things secret. We all know that. But in reality, you might go home and you may talk to your partner about something that you've seen today. You keep it anonymous, but you may talk about something interesting. I used to say to them 2 things. So firstly, the right reason not to share any of those stories is just out of respect. It's just about out of respect for your fellow citizens. But then I also used to say, and actually there's a serious issue of personal safety here. I remember my outsourcing business, we were responsible indirectly for about 2/3 of the Criminal Proceeds Recovery Act actions one year. So those were things we'd found and reported to the police through SARS, and a lot of basically drug gangs had lost their motorcycles. Now, if our staff had been wandering around saying, oh, we found a motorcycle gang while they were in the pub, technically it would have been anonymous. Technically, they probably thought they weren't really telling anybody anything. But if one of those gangs had overheard them saying it, it would have started them thinking about where it had started. So I do think that a really important part of the training is just to make sure that people realise that that tipping off control is not just in the regulator's interest. It's also in the interests of the people on the front line in your unit doing this work. Thanks.
Thanks, Adam. You're adding a bit more color from the regulatory perspective as well, that I do not have sight of. That's really helpful. Um, with that, I thought that it would be good for us to have a 5-minute break, and then if anyone has any questions or any areas that they would like to discuss during this time, feel free to do so, or have a 5-minute break for and then we will reconvene. My time now is 9:08, so it's a bit odd, but we'll reconvene at 9:15 my time. So it's 7 minutes. Welcome back, everyone. Right. Okay. So, hope you had a good break. Yes, Anthony mentioned also adding on to protection for SAR STR reporting and control is that uh, we may lose the safe harbor protection from the local legislation if they divulge the information themselves. Yeah, I think that the concern, I think even recently, there have been a lot of concern with especially loss of life. I think that this is an area, especially when we are dealing with organized crime. And so, okay, so back to speculation, what is considered a suspicion or reasonable grounds to believe, and also whether there is a knowledge, actual knowledge, and sometimes, you know, there may be instances where people just uh, ignore it on purpose. And it's quite funny when it comes to the front line. I recall this conversation that I had with someone, one of the chief compliance officer of a bank, and she said that this has been really, really difficult for her when it comes to having this conversation with the relationship managers, especially where and like the specific example highlighted was actually she asked questions about she asked questions about a potential red flag of a customer that had multiple passports. And I think, in the earlier days, actually, the first time I came across multiple passports or dual nationality was during the time when I was working on a FATCA implementation, the US tax laws. So this is where the relationship managers were trained about having the reason to know about the fat car, or rather whether or not a person uh is a US person. And this is not because a lot of times people would not tell you that, hey, I have two passports and all that, right? And so the reason to know would be, or rather the person would disclose to you that he or she has green card. So it would have got to be through conversation with the customer to be able to identify certain points, or data point, so to speak, is where the say for example the customer comes and says to us that, oh, I just came back from Florida, from my holiday home, and you know that this person actually has a house in Florida. And naturally, even if the person did not disclose that he had dual nationality, or he's a US person, we would know that this is actually a US person. Also, these are some of the areas that we constantly uh train our teams to look out for, is that there has to be a reason to know. And what do we look out for? And again, back to the conversation about staff training, that they have got to be equipped. If they are not equipped, then there's no way that they would be able to do their jobs properly as well. um Funny enough, because I came from the front line, rather than the second line of defense, and I had one of my relationship manager. He had an interesting name. His name was Innocent, and we were having a conversation with our department head, and we were having some concerns about this particular customer. And then head the department head asked me, what's the name of who's the RM? And I say, the RM is he's innocent. Immediately the department head jumped and said, "No, he is not innocent." So no, 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 his name is innocent, and he has actually been trying very hard to look for red flags, and he has tried his best to look for information on the customer and engage with the customer, and it was just not easy to come by. He is trying his best. So there are a lot of times, especially when it is very common for us to uh question whether the relationship managers or our frontline are making enough effort. And a lot of times I would want to give the benefit of doubt as well, that they are trying the best that they can, but whether or not they have been given the tools to do so, that would be something that we have got to collectively think about. How do we prepare our staff so that they are able to do their jobs? Yeah, yeah, chin up. So yes, it is much easier to write an STR if one there is a guideline as well and a template. In fact, in Singapore also there is a template on how we can do the information. The good thing about the template is that we make sure that we make sure that we have this available to our staff, is that therefore be able to they will therefore be able to uh, do this properly. And then when we are looking at some of the suspicious transaction reports, right, whether or not the information provided is sufficient, and whether or not they understand why they are doing it. So that's where we are in terms of how we do it, writing it, describing the reports, what they have observed, the detail of the events in chrono order, and provide an outline. In fact, in the system that we have in Singapore, it even asks us to identify what are the potential suspicion that we are looking at. Is it money laundering? Is it gambling? Or something to that effect. So this is quite interesting that the authorities are also looking at ways to make it easier for people to put in the report uh, with the information that they need. Yeah, Jim, you're right. Frontline staff are typically driven by sales that could have some hindrance as well. So to get the to have the support from the beginning, I think in the last 5 to 10 years, I'll say there has been a change in the way that their their performance, their KPI, the key performance index, are being written, or the balance scorecard, where and there's an element of risk management and compliance being put into the balance scorecard, so that they do not just look at the targets. And this had been the case in the past, where all the frontliners were being assessed based on their performance are assessed based on how much money they bring in. So good to see that things are starting to change from the bank perspective. But I think that from the rest of the other non-bank financial institutions, as well as with the DNFBPs, this is something that still needs to be assessed. Because, say for example, training a real estate agent, as Adam also mentioned about, he highlighted a lot about the real estate agents, is that all of them are working based on commission and success rate. And how do we train them? Even for myself, I remember going through this when I was renting this apartment. The real estate agent just asked me, "Here you go, fill this document up." And yeah, it's just because you need to fill it. I mean, of course, coming from the compliance profession, I know that I should be filling it properly. But you have this real estate agents just say, you can just put in whatever you want. And this is very recent, and that means that there's still a lot of work to be done in educating and building awareness, in those for those businesses that are not in banks, because banks are already doing it, the training, and already made aware, the relationship managers have already been made aware of the implications, as well as given the tools to do so. But when you're talking to somebody who is not from the banking industry, it will still need some time before I think the entire ecosystem will fully embrace the importance of customer due diligence as well, and the entire process all the way until reporting. Yeah, yeah. I think for Chinyap, yes, it's also I think in banks in general, this is already there. I would say at least for those international banks or regional banks that I have visited, the balance scorecard of the relationship managers would typically include an element, and in fact, some of them have a very huge weightage on compliance and risk management as well. Um, so whether or not this is something that is being that has already been in, the influence has already gone to the other non-bank financial institutions as well as the NFBPs, I think we will probably need more work on that. And some key considerations post suspicious the STR reporting is the escalation process, how the governance about notifying the board of directors and the senior management about the STR filing. So this is how actually I have done it, is that we would will compile the numbers on the number of STRs that have been filed for that month, for that quarter, but there will be no information given, no details given, because it is on a need to know basis, and whoever who needs to know this information, they can come to the compliance department to ask from us, and also we will only disclose on a need to know basis. One of the things that is very important is on record retention. I feel that there's not enough emphasis being put on by most organizations, and even senior management is on record retention. Usually, from what I have noticed is as well that I don't know, maybe a show of hands as well. How many of you in your organizations have actually done a revision or review of a frequent review of your record retention policy? Anyone having? I'll ask for putting up your hand to see whether any of your organizations actually have a record retention policy or document retention policy. Yep. Anthony says yes. Yes, in the bank, they would have. Um, yep. So, would any other organizations really put emphasis on record retention? I think that this is something that uh, some countries ask for 5 years minimum, some ask for 7. It depends, and I think for tax investigation, in Malaysia, I recall it's actually 14 years. I don't know whether there has been a change in the policy since I left. And guidance to be provided to staff again on the connected accounts to ensure that they understand the relationship that has been filed, uh, and then also the review of the business relationship and the handling of those relationships. I have always had this issue with handling of a relationship after suspicious transaction reports were filed, and this is also okay, maybe different banks will have different practices. Some banks practice the three strike ruling. If a customer has been the STR has been filed on the customer one time, the relationship is still retained. Of course, it will go through an enhanced due diligence review, and also then the risk rating of the customer might be elevated, so that you continue to have the enhanced due diligence, increase the periodicity of the review, the frequency of the customer due diligence and so on and so forth. Sometimes, but for those entities or financial institutions where there is a very limited amount of resource available, this is how we actually did it. Is that when an STR is filed, I know that we shouldn't be just exiting a customer because an STR is filed, because this is also an issue with overly de-risking our portfolio, and and also something that is frowned on by the regulators as well. And what we did was that we would block the account, and given that we are in a fintech, it's actually quite easy. Is that we will block the account, and then we'll for 30 days, and then the customers will be complaining. And the challenge that we face is that the customer complain to social media as well, that our company was holding their money. And then what we would do is that our customer support staff will constantly be responding to the customer to say that there's a system issue and they are trying to solve it. And when we don't hear back from the authorities for 30 days, after 30 days, we'll just let the customer know that, oh, now the system is fixed. And 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 uh, and usually by then the customer is really very upset, and they decide that they want to close the account. So not ideal situation, but especially for situation where we have very limited resource to be able to do enhanced monitoring on every single account. These are some of the tactics that we had to resort to. Not really good, but that's also because it's extremely challenging. How do we tell the customer that and especially so when we ask for we request for for information from the customer, they do not respond to us, or they respond with a one liner to say, what do you need to know, why do you need to know? This kind of behavior is something that we felt is very suspicious if they do not want to even disclose what they are for. And of course, there are some of them that are a bit. We had an instance where it was an illegal gambling ring that we have identified, and some of the participants or people, the account holders that have been identified, they were quite happily responding to us and say, oh, we were it was online gaming. So and so we filed, and then after that we just held on to them until the customers decided that they wanted to close account with us. So, and I thought that at this time it would be quite interesting to also share some insight from Thailand. And I recently attended this workshop with the and someone actually shared with us how the Thai government, the regulators have this law in there where they have in the clauses in the act also identified certain sections that a customer can be put on the grey list and a customer can be put on the blacklist. And the banks are authorized or empowered to inform the customers that are they have been, their accounts have been restricted due to this section of the act, which is and if is this the is the if it's the section that is referring to grey list, then they will be the customers are actually advised to go to the bank to provide sufficient documents so that they can be removed from that list under the act. But if and even for blacklisting, it is also clearly mentioned to the customer that they have been blacklisted, and they have been blacklisted according to this act. So with that, it actually helps the banks very much in terms of how to manage the customer relationship. Yep. And yes, correct. If the customer due diligence is done well, it will minimize the handling of relationships subsequently when suspicion arose. I think while we can do what we can on the customer due diligence side, a lot of times these are only captured. Remember the case where the customer could have walked in but he would have been blacklisted by the Chinese government for illegal gambling in China. But if he had walked into the branch with a Cambodian passport, no one would have given it a second thought that this could be a false alert or is a false positive and would allow the customer to be onboarded. So these are some of the challenges that we face, the practical challenges we face. And so when the first layer of customer due diligence is completed and had not been able to stop the bad guys from coming in, so the next one would be at the transaction monitoring and the transaction screening level and the ongoing monitoring. So exiting customer relationships in practice, how do you do it? I think this is an area where we have the most difficult situation. Yes, the staff need to ask. Yes, the staff should ask why the person has a Cambodian passport in the first place, and this is probably where again back to how I first knew about dual citizenship was when I was doing the FATCA tax implementation. I think this is again back to having this frontline engagement, explaining to them, having this constant engagement and training and identifying or highlighting or communicating with the frontline, the most recent events so that they become more aware that they would be able to pick up some of the red flags over time. Training again is extremely important. Yeah, curious versus diligent. So maybe if anyone would like to also share, some experience on existing customer relationships in practice, how you have done it, if anyone has actually done any existing customer relationships in the past. Any instances or war stories to share on that? I actually had some because I had the experience and I've been had this fortune, the good fortune of I had this good fortune of implementing a customers selection and exit program in one of the major banks way back when. And so it is very, very interesting. So I think now I believe a lot of banks would have this process in place where you at the beginning as Chin Yap, you mentioned that the due diligence is extremely important. So there is an additional layer now in a lot of banks where there will be certain initial questions that are being asked by at the point of the first contact, and which then we will decide whether we want to onboard the customer. So because then we will proceed with the rest of the customer due diligence documentations and requirement. Yeah, Ricky, yeah, I think it's also depending on it also depends because a lot of times would I be correct to say that in the passport there would be a field for place of birth? That should I mean if the passport is not a fake one, they should be able to identify from that. I believe there is such a field. I can be wrong. Um yeah, so and then and also it really depends on asking for the birth cert because this is possibly where there okay, let's not deal with undocumented persons for now. We will just talk about those people who have documentation. And so customer due diligence, I think, is something that is very, very difficult to do. And then, okay, so with the first level of due diligence, preliminary question, then decide whether or not we want to onboard a customer. And if it is deemed, say, for example, if some high risk indicators are identified, to also escalate for to the community whether or not we want to onboard the customer before we onboard the customer successfully. And then when exiting customer relationship is also, and we need to ensure that all the systems are actually are connected, because it was quite interesting that we were looking at this due to transaction monitoring. We identified this customer that is in the business of trading scrap metal. And one this is also because the business manager was extremely smart and very curious. He looked at the scrap metal and he said copper, and he looked at the price of the metal, and in the market he felt that the pricing was a bit too was really out of the norm as far as the market is concerned. So he went and checked to see whether the the counterparty was also a customer of ours. And then when he did that, this is also during those days when the systems were not connected, and he identified that this particular counterparty had also the same ultimate beneficial owner. And then with that, again, he was able to identify a ring. And then he came to me and he said, "Look, Julia, this is something really funny. I was going through the invoices and I realized that they were printed out from the same printer." Okay, so this is totally out of the ordinary, that one person could even identify that the invoices were printed from the same printer. But he said that the A was very unique because no other printers would have the same kind of character, or like the A with that thing that he said. So then, yep. And anyway, within the ecosystem, we actually identified, and because of that incident, we went through the whole connection, manually identifying the entire network, and we exited 5 customers. It was due to again staff who was very curious and diligent, and also having a proper customer relationship exit process in place, where we also, when we want to exit a relationship, we make sure that we identify all the relationships that are relating to that particular customer. Otherwise, we will not be able to do a full review of the portfolio. Yep. So these are some of the considerations on how to exit a customer, and also to also be concerned about the reputational damage as well. And record retention, as we mentioned, it will have it may have varying retention period. It would have got to ensure that we don't it doesn't cost, we don't retain unnecessarily. We also need to look at the disposal methods, because there will be sensitive information, that how do we dispose of them, not just chuck them into the bin at downstairs. And I thought that I would like to take this opportunity to have a reflection and takeaways from the participants on so far what we have learned in the past 7 modules. If anyone would like to first share. Anyone would like to share or reflect on what we have gone through in the last 7 modules? As part of our wrap up. Um, I'm gonna put people on the spot then. Jimmy, what are your thoughts? Any reflection or takeaway? I see. Really quiet there.
Julia, I think our participants are a bit shy today. But, would be good to hear feedback from the Pacific participants in particular before we cut across to Asia. Given at the first webinar we heard that question from Nauru, Julia, and perhaps a good time to reflect on that was, what if we tick all the boxes? Does it result in being able to be banked, or should I be debanked? Was the question asked in the first webinar. So now you finish off with this question: who to debank, or when to debank, and how to debank. So bringing the two together from your past experience, from a customer's perspective, then if based on suspicion and not evidence, if a customer is debanked, what can the customer do to prove that is a worthy customer and does not bring any risk to the bank?
Yeah, I think that I can possibly also share that I know that there have been a lot of concerns about the banking of correspondent banking relationships, and I'd like to come. That's actually why I felt that I hope the takeaway from the past 7 modules would be that to appreciate the challenges of doing assessment of correspondent banking risk, and also work with the correspondent banks on the various money laundering, anti-money laundering programs. And I think, you know, there are a lot of times when whatever that may seem to be a concern to a correspondent bank, if they look at it deeper, or having that conversation to understand how the controls are being put in place in the respondent banks, it would help. Say, for example, I have a concern, me as a correspondent bank, I have a concern that my respondent is onboarding a lot of fintechs, and do I know whether they are doing proper due diligence on those companies? Because, you know, they are ultimately also having underlying customers there. And so the respondent bank could also give the assurance that, look, you know, this is the kind of due diligence that we do. It's very rigorous. These are the kind of controls that we put in place. So having that conversation and having that openness to discuss on how we can improve um, on our control and our regime would be really helpful. And then that would be my take on that. I hope I answered your question, Shu.
Thanks, Julia. Sorry to ask you a question rather than sharing my reflection or takeaway. I think there'll be a
I
lot
think
more
that is really,
starting.
really helpful to be able to also enforce the kind of lessons that we have learned. And one of the thing is that I recall someone asking this question. We have already complied with all the recommendations of FATF, all the 40 recommendations of FATF. So that is only on the technical compliance of FATF. So Cambodia was taken off the grey list because they complied with all the 40 recommendations. And what Cambodia is now working on is actually the effectiveness part, you know, the immediate outcome. How do they exhibit that they are effective in their controls, rather than to just look at, okay, we have this law in place, we have that law in place, we have done this, we have done that. So the effectiveness has now become the next question as well. I think Jimmy says that he would like to share.
Yes, please, Jim.
Am I on at the moment? Can you hear me?
Yes,
Yes,
yes.
loud and clear.
Very good, very good. Hello to everyone. Hello, Julia and team. So reflection and takeaways for the whole presentation across the last couple of months. It's been really good. I'm from the Cook Islands, so we have a kind of small population. We have a couple of major banks from the Pacific, and we have our own local bank. I used to work for our local bank, Bank of the Cook Islands. So one of the good things that you've been presenting as we've been going along with the different topics is examples from a small nation of about 15,000-16,000. We don't see a lot that comes through, and it's we can teach these things in compliance sessions in the bank or wherever, but if it's hard to give examples and to give some context to staff. So really good to see some of your examples. Although on a bigger scale, it's a lot more easier to relate to the topic when we're sharing these things. So that's what I've been enjoying. I made a comment about the banking. So typically frontline about are keen on sales. Definitely the compliance aspect pulls them back into line. But from the outset, they're just about, making the sales, getting the customer across the line. And then there's that mechanism in the background that says, well, we didn't do this properly, and it sort of mitigates some of those things, and we can pull things back in. But definitely, this last session was actually really good because I've been in the banking quite a long time. I've actually never exited a customer before in terms of relating to an email or, that type of situation. So interesting, very good to see some of your tips and suggestions there. So that's all I wanted to share, and appreciate your time and definitely taking quite a few aspects away and to go forward with things. Thank you.
Yeah, I think I've got to thank ADB for sponsoring the program, because I feel that I really hope that this has been helpful to everyone in terms of, having a better understanding of the anti-money laundering and counter-terrorist financing and why we are doing that. And to me personally, I always feel that if we are just telling somebody to comply with the law without having a good understanding of why they're doing it, then they are just doing it mechanically, and they will not be able to be curious and to ask more questions. But the moment when we empower our team members, and of course, to provide them the tools and the training and the knowledge, is when they will be able to do a better job, because they understand why this is being done. And on that note is where it will also contribute back to the effectiveness of the programs that we put together. I've also put in the chat box the link to a survey. I hope that everyone would also provide some input or feedback on the past 7 modules that we have done, what we can do better, and of course for myself as well, I'd like to know, whether I have been able to bring the value that I hope I am bringing, and then also what kind of topics relating to financial crime risk management and compliance that you'd like to hear more about. And in particular, for me, it's also I want to be in a place where I can make a difference in terms of educating and sharing of my information, and hopefully to be able to make the correspondent banking journey in the Pacific Island better. And back to you, Shu.
Thank you, Julia, once again for delivering the webinar so well. You've kept it all very interesting for all of us. And the content was highly relevant, as Jim reaffirmed that it's these sessions, and Adam also reaffirmed that these sessions were enjoyable with good examples shared across all of them. And they're relevant to the challenges faced in the Pacific. I hope they're very relevant to the participants as well. And with that, I hope these webinars and the repository of the recordings and material that be the basis for continued discussions among the broader teams in the regulators as well as in the banks. So with that, just for the participants' information, we will be sharing ADB's data room link where you'd be able to download recordings and slides. But if you have any suggestions for any more material to be uploaded to the website, if you think there's some relevant material you may have, please share with the team and we'll be happy to upload it for you and for access by the registered participants and more so publicly. So this becomes a repository that would be available to practitioners in the industry. For those who've attended 5 of the 7 sessions, Julia, I recall, we said 70% participation. So Julia has to confirm 5 out of 7. If you've got 5 out of 7, we'll be emailing certificates to you in due course and perhaps within this week. That will be arranged by the team in ADB. Other than that, Julia, is there any last words you would have for us or Adam?
Yeah, I think it is more administrative. I know that there are some teams that may be coming together in a room on one system, so we would not have been able to capture your names on Zoom. So for those teams, right, can you compile your list so that and send to the ADB team so that we can also your list, your names as well as the email address so that we can send to you your certificates. That will be helpful. And yes, Shiu mentioned about the link to the learning hub that has been set up and everyone who is registered will be able to get it. There are a few documents that I feel that are coming up. One is on human trafficking and the other one is on fraud and scam, that a document that we are launching from the Global Coalition to Fight Financial Crime, which I would like to share with everyone as well. So keep a lookout for the documents in the hub. And also, as you mentioned, if you have any reference materials that you would like to share, or if you have any particular questions, do feel free to make use of the hub, the learning hub as well.
Thank you.
Thank you so much.
Thank you. And any final remarks, Adam, from your end?
I guess the main thing I'd like to reinforce, and this is only my local regulatory context, okay, and I recognise that, but don't forget the regulators are human beings as well.
Of course. And from our IDB end, we have sort of a program of support for the Pacific. The program will work closely with regulators for capacity building, including technical compliance, effectiveness arrangements. There are other partners such as the World Bank and the bilateral partners who have quite extensive support programs for the regulators. And from IDB end, we have capacity support also for financial institutions. So if there is a need for any additional support, do reach out to us. You have a couple of addresses, email addresses already, and we'd be happy to hear from you as well. Thank you very much all for participating.
And don't forget to complete the survey. We will also, I guess, be sending the survey out via email for those of you who were not able to capture the link.
Okay. Thank you, Julia. Have a
Thank
good day,
you.
everyone.
And thank you for your attendance and participation.